look at the messages from the FOMC, one of the things that you get very clearly is, yes, the economy is robust, the job market is strong, and inflation is sort of in line with the overall target. However, they also talk of not raising rates, and more importantly, some of the members are already talking about QE instead of quantitative tightening. So one of the things that I find always quite a challenge when I read the FOMC meeting notes is that there's this difference between the message of the overall economy while they're saying that they're going to completely U-turn on the idea of quantitative tightening. What makes you think that they will be reversing that message?
Yeah, I think they're super cautious about how they proceed from here in terms of rate tightening. We've had a fair bit of tightening already, and it's clear they feel we're getting close to neutral. Now, if data picks up, they've made from their past track record of December and January, that when they flipped right back from tightening to not quite easing, but a pause, we can see that flipping back again. I think there's still room for them to raise it a couple more times maybe this cycle, because they do want to get a little bit more ammunition in the locker for if and when there is a recession.
So when you look at the FOMC meeting notes and you read, one, that the economy is strong, two, that they're not going to hike rates, most of the market, what they're looking at and what the message that they're getting is actually the economy is not that strong. So what you believe is that actually the macro data is strong, and that the change of tone will likely come from monetary policy, not from worsening of expectations.
I think that's a fair way of putting it. We view the market's reaction as looking a little bit backwards into effectively Q1 and maybe Q2 of this year, rather than looking forwards to the second half of the year, and that's where we're trying to position ourselves at the moment.
How do you translate that into an investment decision then? What are you doing around interest rate sensitive stocks or sectors?
Well, so far we've had quite a good deal of success in some surprising sectors, actually. I mean, the utility sector over the last 12 months, 15 months has been actually very strong, and you probably wouldn't have picked that a year ago. So we've had some success there, but we don't want to push further down that road because of what I've said about the rates outlook. We feel some of the best areas are in growth quality stocks, where they can continue to churn out numbers in pretty much any economic environment, and that gives you some downside protection if you do get that cyclical peak in the cycle, and you have a sell-off in the more industrial and cyclical areas.
Can I just pose the question around data, whether we're getting better data? Because yesterday was interesting in the States around the CPI numbers. There's a problem around apparel, and effectively the BLS has now changed the way it's been gathering data with a big data source directly apparently from an unidentified department store's transaction records that shows seasonal weakening in the numbers. This is compliments of our high-frequency trading, and they've pointed out that the change in the data gathering. That's good news, isn't it? Because we're getting a genuine read on what's taking place on the ground, rather than sort of old economic gathering of statistics that gives us what we think are data points that we think we should be changing monetary policy on. So we're going to get better numbers to work with, right?
Absolutely.
I think that's absolutely right. And look, the track record of economic revisions after the event is rather disappointing if you think about it, because you form your decisions based on effectively erroneous data. If we can get
sort of passed you by the time you get the revisions.
Well, exactly. Right? I mean, every now and again we get a realignment of the basket, and one item leaves and another one comes in. But if we can get real-time or more real-time data, then that's going to make decision making better.